Hey guys, and welcome back to another video. Do you know that green candle that you just bought into, like these two right here? Well, what if I told you sellers were actually dominating those two candles? They're quite green, so you're thinking bullish, but things are not always as they appear. Now, regular candles lie to you. That's right, they lie to you. However, footprint charts do not lie to you. And this is the tool that I told you about in episode 1. It's the one that confirms whether liquidity was real or not. With the footprint charts, we can see who is in control, whether it be the buyers or the sellers. Now, the platform that I use my footprint charts or any on-chain analytics is Coinank. There's a link in the description. If you sign up with them, you're going to get 1 week free so you can try out, footprint charts if you so wish. Before we begin, what exactly is a footprint chart? Well, instead of seeing just the open and the close of a candle, what we're actually seeing in the footprint candle, okay, is the actual number of contracts traded at each specific price level. It's the ask or the split between the buys and the sells. Now, delta, which is the number you will see above each candle in the footprint chart, the delta is the ask volume minus the bid volume. So it's the buy minus the sell will give you the delta, or the sell minus the buy will give you the delta. Now, positive delta means that there are more aggressive buying. Negative delta means more aggressive selling. It is that simple. So this is basically an X-ray vision of trading. Whatever time frame you're using, you can see who's in control inside each and every candle. And that is alpha that you can use, or at least I use in my trading. Now, why does it matter? Well, it matters because it changes everything. Now, let's say, for example, you see a big red candle, and I know at 4:30, okay, New York time, there was this big red candle here if you look at the regular chart. However, the delta on this candle is positive. We can see that the buyers were in control. Now, obviously, on a regular chart, you're going to get fooled and you're going to be like, okay, well, you know what? That is a red candle. Now, maybe we have a swing high, and maybe now we're going to go down and it's bearish. But it's not the case. So this positive delta is telling me that buyers are absorbing this move to the downside. You're seeing a bearish candle. However, in the footprint chart, this is a positive delta, meaning there is more buying than selling, meaning that buyers are pushing the price up and they're not letting it fall. So the footprint chart will tell you if a move is driven by genuine aggressive buying or just a lack of sellers. And that distinction is actually everything, and that's what you're looking for. It's the difference between catching a real move, okay, and walking straight into a trap. Now, how do we read the chart? If we look here, as you can see, there is positive delta on an up move. That means that there is real buying, there is real demand, and the move should continue. Now let's look at negative delta, and I had to go a little way back to see this, but if you see negative delta on a down move, okay, as you can see here, if you see negative delta on a down move, then the move is real. It means that there is more selling than there is buying. It means that with the given effort, okay, there is result. And I keep saying that many times in my videos, or even, on my X account, if you're not following me, then you might want to do so. What we want to see with the footprint chart is that the effort actually gives some kind of result. And of course, as usual, I use Coinank Analytics for all of my on-chain analytics. If you would like, there is a link in the description where you can sign up and get a free trial and check out the delta, check out your footprint charts, and so on. Now, just a few settings for the footprint charts, and this, of course, could apply to any platform, any footprint chart. Usually you have here a tick or row, so like how many you would like to see. Now, there is something that I do not particularly do, okay, and that is go into each candle to see, what price level and how much contracts were traded, etc., etc. I do not need that level of granularity. So I just look at the delta. I see whether there is negative delta, positive delta, whether the effort is producing some kind of result. Okay, that is the most important thing. And if it's not, then it's telling me that there is an aggressive buyer or an aggressive seller that's eating up, okay, the buys or the sells. Now, in this case, I only look for that at key levels. What are key levels? Key levels for me is well, for everybody, key levels are high and low of the previous day, high and low of the previous week, monthly highs and lows. I use a lot of Asian session for my trades. So I look at key Asian levels. So high of Asia, low of Asia, the 50% Asian range. And so I look at how price is reacting, or I look at the delta, the effort versus the result at any of those key levels to tell me, well, are we going to get a reversal? Are we going to get a continuation of price? How is price reacting? Again, I do not go into these candles to see exactly how much, if the auction is complete, if there is a zero buying here and there. I don't want to see all of that. All I want to see is negative delta, positive delta. As you can see here, we are on the 15-minute chart and we see here a lot of selling. We see a lot of negative delta. However, it's not yielding the results that you would expect if you were to see negative delta. When you see a lot of selling, you expect price to go down. If you see a lot of buying, you would expect price to go up. However, it is not the case here. We are stuck at this level over here. So why is price getting stuck here? Let's look at the session level. Okay, so here we have the high of yesterday. Price has broken out of the high, okay, with positive delta, positive delta. Now here you can see sellers are trying to push price down. However, price is not dropping further. So that means that the effort of selling is not yielding any result. There must be some kind of passive buyers, okay, institutions, whatever you want to call them, whales, I don't know. What I do know is that there is a lot of passive buying that refuses to let price drop further. Now, also, as you can see here, we have two gaps or fair value gaps, if you want to call them. So we have one here, okay, I'll just draw them out like that. And we have another one over here. And I actually like when there is a gap on the break of a key level. High of yesterday, low of yesterday, weekly highs and lows, monthly highs and lows, Asian session range. So what this gap is telling me here is that there's a lot of buying, okay, creating an imbalance, creating a gap, okay, at this key level. The story here is that because there was so much buying pressure to push price above the high of yesterday, to break the high of yesterday, now the delta is telling me that, well, buyers are actually refusing to break back down below. So in summary, negative delta, price is not going down significantly. There's a lot of passive buying or absorption of those sells in the background. Okay. Now, do you only use the footprint charts to make your decisions? No, you don't. It is extra confluence for your charts. A few things that you can look for with your delta is a positive delta on the up candles that confirms that the buying is real and trend continuation is likely. However, negative delta on up candles means that there is a divergence, okay? And sellers are absorbing, okay? In this case, we have positive delta on down candles, okay? Once I read the footprint and I see absorption at a specific key level, okay, I need to execute very fast. The speed of execution is key. And when I'm executing on momentum, the last thing that I want is a platform lagging or giving me bad fills. And that is why I trade on BitMEX. Their engine is built for speed and they have excellent slippage. Like I've mentioned many times before, slippage protection is key. So when the footprint tells me to go, I want to get filled fast. And as usual, $50 free when you sign up using my link in the description below. It's a great way to also support me and this channel and encourage me to do more videos like this in the future. So go ahead and sign up with BitMEX. Now, for the pro tip. One of the best ways I spot reversals, and this has been working really well. I've been putting it to the test. Also, CoinAnk has a replay section, which is new. Okay, so that means I can backtest my strategies, which is my favorite thing to do as an IRL QA tester myself. I will put this to use and backtest the crap out of it. So what I do is I look for key levels. So in this case, it's going to be the high of yesterday, which is over here. Okay, and I look to see if there's absorption of price. Now, what I like to use with the footprint chart is the liquidity heat map, right? So the footprint chart is telling me who's in control, and the liquidity heat map is telling me where money is resting. So where orders are resting, where people are waiting to get filled, and so on and so forth. So let's add the liquidity heat map to the puzzle. As you can see here, this is the complete picture. Here we can clearly see the stop losses, orders that are waiting to get filled for shorts, okay? And here we can see stop losses, orders waiting to get filled from previous longs, okay? So price is in between. Price has to make a decision very soon, okay? So who's going to win? Is it the bulls or the bears? Are we going to drop down and take these guys out and fill up some orders? Are we going to push up, take these guys out and fill up some orders and continue? We will see. But for now, okay, we can clearly see that price is being absorbed. There are a lot of passive buying, okay, as per the negative delta. And that is it. That is all you need to know about footprint and delta. Now, if you would like to see how I use it on stream, I stream almost every day now, except when I'm at the office, then I cannot stream. If you'd like, you can join me on my live streams, okay? I will try to add a time that I would be commenting on what I'm seeing and how I enter trades and so on. Next episode is going to be cumulative volume delta CVD, and that is going to show you who's really driving the market, whether it's spot buying, whether it's perpetual. We're going to see who's really driving the market. And it's another interesting part that I add on top of my trading. Okay. So if you found this video helpful, hit like, subscribe, and join me on my live streams. And also follow me on my X if you didn't do so already. Okay. Thanks for watching and see you in the next one. Bye bye.